Hey, good morning, everyone. Just checking, is everyone able to hear me and see me clearly? Hey, is everyone able to hear me and see me clearly? Good morning. Just want to ensure that everyone's able to hear me. Hey, Solomon. Thanks for tuning in. Nice and early. Are you able to hear me? Just need to ensure that everything checks out. Checks out on my side. Yeah. Okay, nice. Hey, Tariq. Hey, Springfall. Hey, Sergey. All right, I see everyone tuning in, streaming in. Good stuff, good stuff. Welcome back. It should be me, and next week might not be me. Next week I might be on my way to London. I might be on my way to UK rather. Um, at this time, so it could be me. It could not be me. All right. Hey, Samuel. From South Africa. Yeah. Thanks for tuning in. I'm just gonna do a quick short survey. Guys, do you prefer this timing or 1 hour later? Right. Do you prefer if it's like this timing or 1 hour later? Right. Because 1 hour later is when the market kind of just opens and we might see the gaps. Right. That means, like, for example, we have the Jackson Hole Symposium over the weekend, right? And that could cause the market to gap up or down a bit. But it 1 hour later from now, if we were to do our pre-market live analysis, the market we will be looking at the market just opening, right? Or do you still prefer it at this timing? Can you guys give me a gauge, right? Hey Fabio, time is good or one. So Sergey says 1 hour earlier. Solomon Springfall's 1 hour later. Hey Fabio, thanks for tuning in. All right. Okay. Solomon's before market open. Before market open would be just about now. Right? It would be just about now. Yeah, Fabio, we're just doing a quick survey, right? Hey Daniel. All right. This time is okay. All right, cool. Yeah, just wanted to get a feel of whether prefer people prefer it like now or 1 hour later. Like if there's a like yeah, if it's now 1 hour later. 1 hour later would be when the market just opens and the market gaps up or down, right? And now it's just when now it's actually the for most countries it might be a sweet spot, right? But it's right before the market opens, right? So okay, cool. Right. So it seems like the majority of people says that this timing is better. So awesome. We'll stick to this timing. Hey, Signal Mark. Good evening. Thanks for tuning in. All right. Nice to see everyone all my usual regulars back. Good stuff. Okay, Fabio says after market opens, which is 1 hour later. All right. We'll see. We'll see. Maybe I run a proper survey one of these days. Right, there you get a gauge. Yamilu, thanks for tuning in. Um, Yeah, thanks for tuning in. Good day to you too. Right. Today might be my uh next week might not be me, right? Depending on whether I'm on my flight to UK to London first. Right. So yeah, next week might not be me, right? But this week we're going to review some of the big calls that we make, along with some key fundamentals for us to look at. Okay, so now for those of you guys who are here for the first time, this is welcome to our pre-market live analysis, where we look at the key fundamental and technical setups, mainly technical, all right, for the week ahead. All right, so we usually look at slightly higher time frame, right, roughly 13 hours from now or 13 and a half hours from now, right, is where we will look at the smaller time frames. It's either Peggy or Ketan today, right? But yeah, we look at the smaller time frames. Watson, nice to see you tune in nice and early. All right, welcome to the show. Gonna make some money today. Okay, well, so if I were to say anything else, right, I better cover the disclaimer first, right? That, yeah, remember everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. So please do your own due diligence before you guys trade. Okay? Yeah, so that's important disclaimer, right? So yes, this, of course, I need to say this before I say that we might make some money, right? Uh, our agenda, our usual agenda, key news events for coming up for the week. I think we mainly have Wednesday, Thursdays, and Fridays, which have the more important key events. With Friday, guys, remember this Friday is the non-farm payroll, right? I don't think there were that much big important news events over from the Jackson Hole Symposium. Right, I was taking a look at it. I was hoping that like the BRICS summit, Jackson Hole, right, would create a little bit more movement, but I don't think so. Right, but there are a couple of key news events which are watching out a little bit more this week, with the major one being on Friday, right, non-farm payroll. But we touch on all that in a bit, right? For those of you guys wondering, okay, got it, Ren. Right, introducing your host for today, right? Who's this dude over here, right? My name is Desmond Young, right? So I run the award-winning research firm Everest Fortune Group and also the Forex Army. We're finalists for 2019, 2020, and 2021 for Best FX and Best Equity Research. Right, so we regularly work with many of the major financial institutions, helping them forecast where the markets are going. Banks, brokers, even treasury departments. Right, so we just tell them, give them really high accuracy kind of forecast on where the markets are heading. But we have a special partnership with IC Markets, where we bring guys good stuff, the juicy stuff, the stuff that take a trading to the next level. And our pre-market live analysis prepares you for the week ahead. Our hit rate, you can ask anyone over here, is good, about 70%, I would say with confidence, right? It's about 70%. Risk to reward is usually 1:2, 1:3, right? So yeah, it's fun, right? These sessions are fun. It's quite stressful, but it's fun. All right. So if you want to follow me on Instagram, you can, head over here, Comfy Desmond. I just got not block it with my head. And over the Forex Army, where I'm creating a bit of a small course. Hopefully, I'll be done with it this week. So right before I leave for UK, right, for you guys to kind of go through if you want to. All right. Now, let's begin today's session. All right. I do want to encourage you guys that if you have any requests, please send them through nice and early, because as you know, we rarely have time towards the end of the session to take the custom requests because we are flooded with them. So just a heads up, try to send them in nice and early if you have the chance. Okay. Now, let me see if I can go here. Yep, that's right. And can I pick my highlighter? Highlighter. Yeah, I got my highlighter over here. Okay, so a few important things to take note of, right? So I'm highlighting um, Wednesday, right? Wednesday is the first key one. All right, Australian CPI would be the first big one. All right, this is GMT +8, so it's 9:30 a.m. my time. All right, so you can reference Forex Factory or your usual calendar. right? But for me, I'm using my own calendar, so I get a good gauge of roughly when the timings are, right? Wednesday, right? 9:30 a.m. GMT, plus 8, plus 7, yeah, plus 8, right? Australian CPI is one of the first key things you take note of, right? So even though it's kind of still at this historical high, the CPI kind of has been slowing down steadily, from previously it was 5.4%, right, in June, right? And now it's kind of expecting it to drop towards a 5.2%, right? So this trend is likely to continue, and this is good. And you kind of put downward pressure on the Aussie dollar, right? So this one, Aussie dollar, you can kind of expect it to kind of weaken over time, right? The AUD. Okay. One thing for the US I probably want to take note of is this the ADP non-farm employment change, right? So it's kind of just uh, we had a stronger than expected, job gains in June, right? So these are two key figures to take note of, right? So another strong print for August, could be bullish for DXY, So if you got equally strong print, right, the DXY, we could be expecting it to kind of strengthen a bit over here, okay? And we also have the preliminary GDP figures, kind of expecting it to remain at 2.4%, right? If there's another strong print over here, if it's 2.4% or anything above 2.4%, we can expect USD to strengthen, right? But the updated result, it should not deviate too much from this 2.4%. I kind of expect it to kind of remain at 2.4%. Okay. Next key thing. So we're going to Thursday, right? Thursday, one of the key things I look for is for the China yuan, right? Manufacturing PMI, right? We're going to be watching it close. The people who will be watching it closely rather are the crude oil bulls, right? So people who are bullish on crude oil, as any improvement from 49.3 to 49.1, right? So if this if what's the word for it? If it closes, if this number is above 49.1, right, it's good for us. Rather, it's good for the crude oil. People who are bullish on crude oil, because it's a good measure on the manufacturing sector, right? And yeah, it could, if it does well, it could rekindle so-called demand for oil. All right. Last week, let me see over here, unemployment claims, very very important, right? So last week, the US unemployment claims printed lower than the estimate. This was a second consecutive week of lower claims, lower figures. Let me find it over here, right? This was the forecast. This is 236K. 236K is a forecast, right? Anything lower figures basically act as a bullish catalyst for DXY. That means if it prints lower, right? If this thing prints lower, right, then you can expect USD to strengthen, because it technically say if there are less people doing unemployment claims, then technically, right, the job market is doing well. Okay, so that is one key thing to take note of, right? So if there are less people who are actually sending in their unemployment claims, right, that means the job market is doing well. It means that the USD is strengthened. Okay, another key news event is the core PC price index, right? The headline and core PC readings for the month of June declined quite significantly, but with July CPI and PPI data kind of showing a recent uptick, there are a little bit, people are kind of concerned, right, that inflation may possibly make a resurgence. All right, so the latest PC reading from here, right, could confirm these fears. So take note of this. All right, so take note. These are the two big news events on Thursday for you to watch out for. Okay, the core PC price index and the unemployment claims. And on Friday, we move on to Friday, right? Where is it? Over here, right? The non-farm payroll. Non-farm payroll, right? It basically, let me think. Right, yeah, NFPs have came in lower than their respective estimates for the last 2 months. So think about it, June and July, whatever the forecast was, it came in slightly lower, right? So That's a key thing to take note of, right? That means at least for the last 2 months, we've been repeatedly forecasting for a higher number, but NFPs, the results been coming lower than the estimate. Unemployment claims has been ranging between 3.4 and 3.7 percent, right? So we are kind of expecting the unemployment claims to remain unemployment rate to remain within here. We don't expect it to deviate much from 3.4 to 3.7%, right? So another lower than expected month of job gains could, basically be bearish for DXY, right? Be bearish for DXY. So it really depends on on whether we get a higher or lower print for this for the NFP, right? If anything, based on the last 2 months, um, small slight bias that we could be seeing basically it could come in lower than the estimate, which could mean that the DXY is dropping. All right. Another key thing to take note of, right, on Friday is the ISM manufacturing PMI, right? It'll be released. Basically, August reading is likely to show that this sector is contracting for the 10th month in a row. So no surprises here. So yeah, take note of for the ISM manufacturing PMI. All right. So this covers all the major news events, which I think we should be looking out for on Friday. Okay, which I think we should be looking at on Friday. Let me just come back here. All right, I can see the request coming through. We have US 30, gold, GBP USD, GBP CAD. All right, let's go to our analysis. Okay, let's start off with the I always kind of just start off with the crypto, right? Just as a good gauge, right? Last week we forecasted that crypto will remain above the first support bounce. It held its position very well, you can see. So there was a very, very nice overlap support over here, right? Very, very nice overlap support. You can see price responding to these levels many times in the past, right? You can see a nice little bounce, reversal, bounced, and hence price was dropping very strongly, but we forecasted that above this level it should be able to hold quite nicely, and true enough, price has been holding quite nicely above the first support, so we should be able to see it bounce minimally to the 28394 level, right? So I quite like this level, right? Very nice 100% projection that lines all the way here. If anything, we might see the Bitcoin maybe spiking down, touch this level, and then going up. All right, so this will be one of the key news events to watch out for. Bitcoin making a bounce above the first support. All right, same as Ethereum, I like it, right? So we were forecasting that it hold above first support, right? Remember, Ethereum had a very massive week the previous week where it was dropping very strongly, right? We have highlighted the same kind of overlap support over here. Price has held very nicely above that level. In fact, very nice price action. So we should be seeing, right? Could be seeing a nice little bounce up to the 1810 level for Ethereum too. Okay, definitely one of the key news. Key if you're trading crypto, Bitcoin or Ethereum looks very nice on support. What we didn't do that well was our forecast on DXY, right? So I was forecasting for DXY to kind of reverse a bit. It did not. All right, DXY did not reverse as well as I had expected it to. And now let's do our analysis on DXY. All right, so what what can this instrument tell me about? First thing I want to highlight to you guys is that I see a sort of a Nike tick over here. I see a sort of a Nike tick with price approaching this kind of big resistance up there. Okay, so I'm going to highlight this Nike tick with price coming all the way up to 127. I noticed that this 127 is in line with this very nice swing high resistance, right? So this will now form my first resistance. Okay, I really like it, very nice 127% Nike tick lining up with a swing high resistance. Okay, that to me is always a very good sign of a reversal to come. XTI USD, I'll take a look at that in a bit. Okay, could you remind me what instrument is that again? All right, XTI. Oh, okay, crude oil. right? I think that's different. Yeah, crude oil. Okay, crude oil, right? We look at BCO, yeah, BCO USD, same thing, crude oil, right? The next key resistance will be up here, the second resistance. I have a fairly decent confidence that we might be able to see, right? That we might be able to see a nice little reversal down to the first support. We should be, right? With the 100% projection. Interesting point. Um, I love it when people know their Fibonacci's. um, but I don't think you'll be at 100% projection here. Not at the 100% projection here, right? So I'm not sure if this was the 100% projection you're looking at, like this movement, projecting it up to this movement, right? But you can't use this movement and projecting it up to here, right? The reason for that is because what you're looking for is a zigzag, all right? You're looking for a zigzag. But this movement here, where price goes all the way down and all the way up, right? All the way down, there's too much of a deviation over here, which is why you can't use the Fibonacci projection, right? Which is why you can't use the 100% Fibonacci this way, right? So we cannot use it that way. But what we can see is that we're likely to see a reversal from here all the way down to here. That should be the key thing. And on Friday, if the non-farm payroll is bad, right, we could see a bigger reversal and for price to be taken all the way down, right? Let me see. This could be the 23. Yeah, if this was really the 23, we could see it drop technically to this level first. Don't want to be too overly optimistic, but I would play it to this level first, right? If it breaks this level, it can go all the way down to here. Okay, but otherwise, right, we should be able to see a reversal of the 104. Now, let me see. Ichimoku cloud. Nope, nothing. Hmm. Yeah. Slight bearish bias on DXY. Right? Slight bearish bias on DXY. I can zoom it until like this, for you guys to see. Right? Let me know if you're not able to see it that clearly. Okay, so once we have our view on DXY, is where we can have view on dollar franc. So last week on dollar franc, we were expecting a reversal. I think price is kind of just about over there, so I'm going to remove this so it's slightly clearer. Very tricky. So that's the thing about trend lines, which I don't really like to use because it's not a good entry level. It's kind of as a it's better as a gauge, right? It's better as a gauge on whether price is at a nice level, like what's the momentum of price. But this, yeah, right now it seems like we're just about testing a key resistance level over here, a key resistance level, first resistance, right? Price is probably just at about at a 50%. Yeah, price is just about 50% over here. 61% here will be your second resistance, right? And this could be also a 61.8 retracement. Nice bit of resistance over here. I would probably go short here again, right? I would probably go short here. This level doesn't go too far back. Comes all the way here. Could it be a big 23%? I'm not sure. No, 23% slightly further. However, I think we could see a nice Fibonacci projection that comes all the way down to here, right? A nice 100% Fibonacci projection comes slightly above over here, right? Slightly above over here. So we could be, I think we could see a reversal from here, right? Could see a nice little reversal from here to take prices all the way down to the first support, right? Why do I say that? We got a nice bearish resistance, right? Price is right on the Ichimoku cloud. 100 simple moving average. Let's take a look at that, right? Let's see if it works. I like it. 100 moving average. So what I like about moving average is how well price conforms to it, right? Price reverse very nicely from here. Price reverse very nicely from here. Price seems to be right about at this level. Okay. So they're all three line. I know we got the moving average, we got the Ichimoku, we got the overlap over here, right? We got the 50% retracement, 61.8 retracement, 100% projection, and an overlap kind of resistance and a bearish channel. So man, it looks very, very good. Okay, so I think that we have a decent chance that we can sell, right? Of course, remember this is not financial advice, right? But we could see price reverse from here all the way down to the first support quite nicely. So this would be one of the probably the better setups for the week for that we could be looking at, because at the same time we should be expecting weakness on DXY, right? We should be expecting weakness on DXY. The only risk level I see, yeah, actually it's about here, right? Price might fluctuate around here, but we could see a very nice reversal. That means dollar weakness, right? We are seeing strong dollar weakness over here. A Nike tick reversal plus swing high resistance, right? That would form our dollar weakness, which is in line with dollar franc, which is in line with the support level we're expecting on euro dollar over here. Okay, euro dollar. You can see for euro dollar, for those of you guys who are here first time, I can highlight this ascending support over here for you, right? Nice little bit of ascending support line to see that price is on a key support. This is also, if I'm not wrong, a 127%. Oh, 127 is slightly lower. Okay, slightly dangerous then, right? This could be a 61, 78, I'm guessing. Yeah, 78% Fibonacci retracement, right about over here, right about over here. Okay, and the support line, it actually goes a little bit further back. This is a key support line that kind of cuts through a lot of levels, right? So key support level over here, could it go back even further? Probably not. This key support line over here, right? Price is right on that level, right? Right about on that level if I fine tune it a little bit more. So that means nice ascending support, nice key support, nice 78.6% Fibonacci retracement. So we should be able to see a small little bounce from here. I probably wouldn't be too confident to play it too far. You could play it up technically to maybe this level over here, right? Although I might just play it up to here. I might just play it up to here, in all honesty, right? I might just play up to here. That might be a good enough setup for us to play. But if you're a little bit more confident, right, you can play it up further. But yeah, over the next 7 days, this could be enough to see the bounce. Okay. Solomon, we don't use 121. We use do you mean 121 as in Fibonacci extension 121? Or do you mean that 100%, like 100% kind of projection here? Okay, it could be. I see what you mean. If you mean 100% projection, starting point, middle point, ending point over here, and you're projecting it down, right? It is at the 100% kind of projection, right? That means I will take 1:1. It's the same movement, right? So it's a good point, right? We got 100% projection, 78.6%. We got ascending support over here. We got a nice overlap support over here. So we could be able to see a nice little bounce to take prices to 1.0933. Okay, and that is in line with what we expect for dollar franc. We're expecting a reversal on dollar franc. We're expecting a bounce on euro dollar, and also a bounce, I think, on pound dollar. Right. Let me just take a look at pound dollar. Pound dollar is not giving me good vibes. Yeah, pound dollar is the trickiest one today, I would say. Starting move in a different direction. If I were trading pound dollar, right, I'll be a little bit cautious because what I'm expecting of everything else, right? But we could be seeing price kind of make a drop. Um, we could be seeing weakness on price for pound dollar at this case because it's a little bit sorry it's a little bit of a topish pattern that we see over here, right? It looks like a little bit of a head and shoulders kind of pattern, right? And so the exit potential could see price kind of drop all the way down to here, right? So that is what I'm a little bit worried about too. It looks like it has broken the Ichimoku cloud support, so not looking that good, right? And it could drop all the way to this support level for pound dollar, right? My second resistance, oops, sorry, my second resistance would probably be up here. Right, this would probably be my second resistance, right? We can expect price to drop on for pound dollar. Okay, so this is our view on pound dollar. Not the best, not the best. It deviates from the bearish USD we're expecting, but I cannot ignore that there's a very very nice. You can call it cup handle, you can call it head and shoulders, you can call it a topish pattern over here. But there is a topish pattern, and it looks like it has more or less broken it. You can stretch it all the way back to here. So it's actually a pretty big level that is broken, right? And it could be dropping. Yeah, that is at least what I'm seeing for pound dollar. Unless we reference all this, right? Expecting a bounce on euro dollar, expecting a drop on dollar franc, we could say this is a fake out. So this would be, I would say, is my lower confidence setup, right? It's my lower confidence kind of setup. Low confidence. It'll be a low confidence kind of setup. Okay. Dollar yen, right? Dollar yen, we forecasted for price to bounce. Um, it has continued to bounce quite nicely, right? So last week, we said that it will bounce above the first support. It has bounced, right? And we should be able to expect it to reach our wave 5 target over here, right? How do we get the wave 5 target? For in case you guys are wondering, how we get the wave 5 target is because I see something like a 1. This is Elliott wave, by the way. 3, 4, 5. Okay, so this is usually how Elliott wave looks like. Wave 4 cannot enter into the territory of wave 1 over here, right? It can't enter into this territory. But what is happening is that to get a wave 5 target, there are two ways to do it. Wave 1 to wave 3, and you end at wave 4. You use the 61.8 projection, and it's up here. Okay? The other way to do that is the length of wave 1 projected onto wave 4, and you find it should be the same distance, right? So the distance of wave 1 should be the same as the distance of wave 5. So you would then use the 100% Fibonacci projection, right? So all of it is lining up over here to suggest that price should ideally be coming all the way to here, right? We are playing it above this support level here as last week. So if you manage to get in at this level last week, you should be in at a very good price, right? And seeing price kind of inch up towards this target level. Okay. In terms of stop loss placement, a little bit tricky, but I think in terms of stop loss placement, putting it here would probably be the next key level for you to look at. Otherwise, it's all the way down here, which is a bit far away. But I think over here should be enough for the week. I expect prices to come up to test this wave 5 target. Okay, this should be enough for us. If price comes down to test the first support, there'll be a good entry level. But right now, if you ask me, is it a good level to enter? No, right? It's not a good level to enter. I would rather wait for price to come down before entering, right? But remember, last week we already called this movement here. We called this movement where price came down to touch this support, right? So it's unlikely that price will come down and bounce up again. I kind of expect it to kind of just rise from here. If it doesn't, if it doesn't, and it provides you the opportunity to drop a bit, by all means, it'd be good to take it. Otherwise, we should be able to see price reach its wave 5 target. This target we've been highlighting for the past, I think since 3 weeks ago, right? We've been highlighting for this level to be reached. Okay. Now, I would take a look at some of the key things over here. Dollar CAD first, sorry. Dollar CAD, we highlighted the intermediate support last week over here for price to bounce up. It has continued to bounce up for dollar CAD. So our analysis is going quite nicely. I'm going to convert this into a first support. First support, this will now be my second support down all the way down here. Okay, and this will be my first resistance. I'm going to remove this level. Okay, price is working out quite nicely. In terms of if it breaks this level, it can rise up to here, right? I'm going to put it at my second resistance over here, just about this level. That means that we're kind of watching between these two levels. I'm going to put this as the upside confirmation, and this is the downside confirmation. And this would, sorry, be my first resistance, and this would be my first support. And this would be my first support. So we require price to break this first resistance over here. It's a pretty, it's a pretty strong first resistance, right? We can see that price has been reversing off this level multiple times, bouncing off multiple times, reversing off these levels multiple times in the past, right? So we should, if price is really able to break this level, we could see it rise quite nicely to the first resistance. But this is our upside confirmation and our downside confirmation. All right. So these are the two levels that I expect price to kind of range between. Only if it breaks any of the levels does it trigger another move. All right. Aussie dollar, we highlighted the support level. Remember, it was dropping very strongly. It touched out 78.6% retracement. It has bounced, right? And it reacted off our resistance and come down. So our analysis is right on point. If you got in on the first resistance, right, you should have been able to play the first move down to here, make some good money. Okay, I would still highlight this as my intermediate support. In fact, I'll put it as my downside confirmation. If it breaks this level, we should be, right, very, very strong bearish momentum over here, right? Very strong bearish momentum kind of pushing prices down, right? So if it breaks this downside confirmation, we should be able to see it drop all the way. A little bit of a free fall towards the first support. This might be an intermediate support level over here, but it probably wouldn't stop it from having a nice little bit of a free fall down to the first support. Okay. Kiwi dollar, not much. We highlighted this level last week as a downside confirmation. We're waiting for this level to be broken to trigger the move down. It did not break the level, so it did not trigger the move down. We're correct in highlighting this as a key support level, which also happens to be the key 61.8% retracement of this entire move up here. Okay, so same story between Aussie dollar and Kiwi dollar now, right? Both Aussie dollar and Kiwi dollar are seeing a downside confirmation right about over there. So if they both close slightly lower, we should be able to see a drop to first support. This is kind of in line with our what we expect, right? This is what kind of in line with what we expect for our CPI over here, because we're expecting the CPI to drop further from 5.4 to 5.2% over here. That means we continue the downward trend, so we should be able to expect AUD to continue dropping, which actually is in line with like our broader Aussie idea, Aussie bias of dropping all the way. So fundamentals and technicals line up very nicely for Aussie dollar. Okay, going to take a quick look at WTI, right? WTI, we called for a reversal for the past 2 weeks below the first resistance over here. It has worked out very nicely. Price reversed from this level as we forecasted, so it's dropping very nicely over here. Okay, now what can we expect from it? I think we got a bit of an intermediate support over here. We got a bit of an intermediate support over here, right? So a bit tricky, right? We can continue to sell below the first resistance, right? Because this still remains the first resistance. Why is it a first resistance? Nice bounce over here, nice reaction, nice reaction, nice reaction, nice reaction, right? So this remains our key first resistance level, right? Our key first resistance level. So, we'll continue to kind of be bearish below that, right? But technically, with price at where it is now, it's not a good entry point to sell, right? You either wait for price to strengthen up to here and then you sell on the resistance, or in this case, we identified a bit of an overlap support over here, right? So if price breaks this overlap support, we can see drop all the way down to the first support. Okay. Yes. No. So Fabio's asking cat and oil are strongly correlated. One way to do that, you just use dollar cat. Same percentage scale and you load. Okay, maybe it's not that you can use correlation coefficient, right? And you add in this as dollar cat. I add in dollar cat over here, right? You notice that most of the time, right, it is negatively correlated, right? It's spending more of its time in the negative region, right? It's spending more of its time in the negative region over here, right? As compared to the occasional time when it comes up here, but the majority of its time is negatively correlated, okay? So that is what I need to take note of for the correlation coefficient, right? Dollar cat and oil are negatively correlated. So not that strong. Honestly, it's not that strongly negatively correlated. So that's why we're a little bit of a range over here. Is the same kind of idea that we're seeing in WTI, right? In a little bit in the middle of nowhere. So it's a little bit hard to call this move for oil or for oil dollar cat. Gold, we forecasted a bounce, right? We forecasted a bounce above the 61.8 projection, right? It has bounced quite nicely, so you would be making pretty good money, right? And I think it's rising towards this first resistance over here. So I'm not too confident of this being a strong first resistance, right? How we highlighted the support is because of the very, very strong overlap, right? You can see price, bouncing off these levels, right? Reacting off these levels in the past, right? Bouncing off these levels. And that is why we highlighted this as a first support. For those of you guys who know how to use it, this is a 61.8 Fibonacci projection. If you know how to use it, that's great because it can help you find these kind of levels where price bounce very nicely. The trick to finding this 61.8 projection, this 61.8 projection is that you're looking for a zigzag like this kind of movement. Okay. If it should be something like that. It should not be, right? It should not be like this. You cannot use a 61.8 projection to use starting point here, ending point here, and middle ending point, right? You need a very clear movement down, clear movement up, clear movement down, right? So this is how you kind of find a 61.8 projection, right? Price lines up very nicely at that level and it bounced. So what can we expect for gold this week? That's a very important question. Let me think. First support kind of remains there. I think the movement on gold is not that clear, right? I'm not that confident to say that price would, price, if you had gotten last week at this level over here, right, where we forecasted the move last week, we forecasted a move over here, right? If you had gotten, that'll be great. You're in a pretty good money, right? But the problem is that price is a little bit in the middle of nowhere. It's not at the intermediate resistance. It's not at the support. It's kind of right in the middle, right? It's kind of right in the middle. So, you're not at a good entry level, technically to speak. I would highlight this at the first intermediate resistance. If it does break this intermediate resistance, we could see it rise up to the first resistance, but this will remain my intermediate resistance. Not too confident of price going either way, but in this case, right, we could call this the upside confirmation, and we can call this the downside confirmation. The downside confirmation, if it breaks the level, it can go all the way down to the first support down here. So it's in the middle of nowhere. So we kind of need to wait for any of these levels to be broken to trigger confirmation. This is not strong enough, right, to confirm for reversal. I think that it needs to break this to trigger the move up to here. Okay. Now we had a request for DJ30. right? I was forecasting it for it to bounce last week. It looks like it's kind of just, if you tweak the trend line a bit, it looks like it's kind of just testing that level a bit more. Um, this key support level over here. I am still a little bit bullish on DJ30. I still think it could have a nice little bounce. It is just about testing the 78.6% retracement. So we are not stopped out yet on it, right? It's actually bouncing quite nicely, but I would probably play the bounce, right, to this resistance level over here, right? In fact, I'll just play it to this level over here. I'm not too confident for price to bounce all the way up to here. So I'm probably just gonna play the bounce up to here. First resistance. In terms of my second support, right, I'll put it down here. All right, so this is more like your stop loss placement. If you, in terms of stop loss placement, you can place it slightly lower, give it that little bit more breathing space for price to make the nice little bounce. Let me see where's Ichimoku. Ichimoku is right about there, testing the key support level, and price is also on the 100 moving average, just about testing this level over here, right? And if I'm not wrong, price is just about testing the 100% projection right about over here. So we should be able to see a nice bounce on DJ30 to take it all the way up about to the 35018 level. Okay. I did see a request for pound cat earlier. GBP cat. Well, let me see what was happening on pound cat. All right. I think we were highlighting the weekly chart for price to bounce, right? So price, this was probably back in June, right? So we forecasted a bounce to reach its target. It has reached its target, but this is a slightly longer term chart, right? I did highlight a bearish kind of trend line. It's a little bit hard to draw this trend line, whether it's over here or here, but there's a little bit of a bearish trend line. Um, a bit hard to trade pound cat though. Must you trade pound cat? Must you trade pound cat? But if you have to, probably highlight this as a resistance, right? This descending trend line, right, capping most of the levels over here, right? So we could see a reversal from this level, and long term wise, probably see the reversal back down to here as a first support. Right, probably back down to here. So yeah, my bias would probably be over here. The move might have happened over here already, right? Where the first reversal happened. Right, but if you're looking for a way to take this trade, this would probably be my levels. First resistance, second resistance as a potential stop loss level, right? I do like that, it captures most of the levels over here. You want to put it tighter, you can put it over here. Otherwise, I will consider this as the main second resistance to play the reversal down to the first support level over here. Okay, guys. Yeah, so yeah, these are the few key levels that we I think you guys should look at the DEX, right? If you guys are looking at the DEX, it still remains on the key support level, right? So we should be able to see a nice bounce on DEX, right? With this as like the first support, right? This would form our second support over here. I know there's no clear support level, right? And this would be our first resistance, right? So we should be able to see ideally a nice little bounce on DEX for prices to come up. US 500 still remains above our key support level down here. For the S&P 500, for those of you guys who are wondering how I found this level, first and foremost, very strong pullback support down here at first support. Okay, very strong pullback support because this was a big resistance level. Price is now making a pullback to that level. Okay, so pullback support, which happens to line up with the, if I'm not wrong, is the 38% Fibonacci retracement right about over here, and the 100% Fibonacci, the 78% Fibonacci projection down here. So I kind of expect prices to drop a little bit more down to here to see the bounce. I don't I don't think we're going to see the bounce all the way up to here. This is a little bit of a big move to play all the way up to here, first resistance, right? It might be enough to play it up to the intermediate resistance, just about over here as our intermediate resistance, right over here, right? So I do see a nice bit of Fibonacci confluence over here, right? So I like the bounce that we could be seeing above the first support, and potential stop loss level for it if it breaks the level is it could come all sorry, it could come all the way down to the second support down here. Bam, right? This would be my second support all the way down here. Okay, which would probably be in line with my 50% retracement, right? Sorry, so probably about over here, right? Second support. Okay, I think I covered most of the instruments you guys requested, right? Pound yen has formed a double top H4 time frame. Um, Pound yen. Um, I would say that the double top over here has played itself out already, right? Double top breakout reverse, and I think it more or less kind of reached its potential already, right? I would think the double top has exit the double top trade is done, right? It has reversed already. I wouldn't enter a second double top again if that's what you mean, okay? Because for pound, I think the key support level is over here, which it seems like price more or less kind of reached that level already, right? So yeah, it seems like price more or less reached that level, right? Which is in line with the just about the 50% Fibonacci projection about over here, right? So price has more or less reached the level. I don't think you could play the reversal anymore, right? But there was a nice double top exit, I would say, over here, right? Pretty nice double top exit on pound yen, right? We got a request for US 30. I think I covered DJ 30 already, man. Right? We're forecasting a bounce on DJ 30 above the first support 34281. Right. So this is the key level. All right, Samuel Boateng. Right. We're looking for a bounce above this level. Nice bit of Fibonacci confluence support over here, which is why I still remain bullish for prices to kind of bounce above this level. The trend line, I just tweaked it a bit. So, that's the tricky thing about trend line. You use it more as a gauge of momentum than as the trade itself. Nice Ichimoku support, so we should be able to see a bounce, right? Anyway, guys, right, I think we have covered enough for this session, right? Thanks for tuning in. Thanks for yeah. Hope to see you guys next week. It might be me, it might not be me. Depends whether I'm on my flight to London already, right? But it's always nice to see you guys, right? It's always nice to start the day. Looking at key setups. My key levels I'm looking at: dollar franc reversal, very nice. Same thing as a euro dollar bounce, right? These are the key things that we're looking for, and DXY reversal. But I really like the euro dollar bounce and dollar franc reversal, and the DJ 30 bounce. These would be the key setups for the week. All right, guys. That's it for me. You can tune into the live market analysis with Peggy or Ketan later today at in about 12 and a half hours time. All right, so do check that out. And remember to register for the webinars, because now we're sending out, I think, email reminders, and that should help a lot more to let you know, guys, when the webinars are starting. All right. That's it for me, guys. Thank you so much for staying throughout this session. Remember to stay safe, trade safe. I'll catch you guys the next either next week. If it's not next week, it'll be Ketan or Peggy taking next week's session. All right. Peace out, guys. It has been nice hanging out with you guys. And of course, yeah, I think I need to let you guys know. Disclaimer at the end, of course, remember, everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. Please do your own due diligence before you guys trade. Help me smash that thumbs up button if you happen to be here, right? It really helps the YouTube algorithm be able to find our videos, right? Thank you very much, guys. Stay safe, trade safe. Peace out, guys. Bye bye.